Hello and welcome to Forex Brokering's update on selected markets. It's Tuesday 18th of August. UK's annual consumer price index increased by 0.1% rather than holding at 0.0% as expected by analysts in today's release of macroeconomic data. Although the CPI is far from the Bank of England's target of 2%, the increase was well received by investors. It's also worth mentioning that the core measure accelerated to 1.2% as opposed to 0.8% expected by analysts. The inflation data triggered a lot of interest in the British pound across the currency boards, with GBPUSD advancing by over 100 pips from today's lows at 1.5560 and currently testing the resistance around 1.5680, which the market failed to break multiple times over the past month. Let's move on to the GBPUSD chart for further analysis. With better than expected inflation data, market participants can expect a break and hold above 1.5680, 1.57. It will be important for sterling traders to see the market staying above 1.57 during today's EU and US session, not to fall into any bullish traps, especially after housing starts and building permits data, which is out later today. But more importantly, tomorrow's minutes from the last Federal Open Market Committee meeting will be announced, and this will most certainly drive a lot of interest for GBPUSD. Therefore, expect high volatility during Wednesday's trade. So, the important technical levels are the resistance at current level and support around 1.5550 within the bullish price channel, with major support at the level of previous higher low at 1.5450. If there's a rally above 1.57 during today's US session, then we may expect further movements up and towards the current highs of 2015 at 1.5920. Euro remains supported at 1.1050 versus the US dollar, and this level falls onto the 38.2% retracement, and the dip could be seen as a good opportunity to buy, with resistance pressure at around 1.1150, which will be the resistance in current technical setup. A break above 1.1150 should see accelerated moves up towards 1.13. Long positions should be reconsidered should the market break below 1.1050, as next target for sellers will be an area of 1.0850. Gold remains supported by investors above 1112, and further movements up and until 1130 can be expected, with extended targets around 1175. With gold being highly volatile, we advise you to reconsider volumes and take protective measures, as we expect even more interest in gold later this week. A break below 1112 would see accelerated movements down and until 1105. That's all for today from us here at Forex Brokering. Thank you for watching. Would like to remind you one more time about the upcoming release of minutes from the Federal Open Market Committee meeting tomorrow, as this will certainly attract a lot of movements across the currencies board and precious metals, and thus advise you to use stop loss orders on each trade. Thank you, until next time.